The Commodity Channel Index, or CCI, is a versatile momentum oscillator that can be used to identify overbought and oversold conditions. Bullish and bearish divergences can also be used to detect early momentum shifts and to anticipate trend reversals. It was developed by Donald Lambert and was featured in Commodities magazine in 1980. He originally developed the CCI to identify cyclical turns in commodities, but this indicator can also be successfully applied to indices, ETFs, stocks, and other securities. So let's go ahead and load up the CCI on this stock chart of Yahoo here at stockcharts.com. Scroll down to the bottom. In the indicators section, you will see the Commodity Channel Index. Now, the standard setting is 20, but this is one that you can adjust to your liking. A setting of 30 will give smoother lines. A setting of 10 will give very jagged lines, a lot of whipsaw, and also a lot of false signals. So let's go ahead and click Update and take a look at it. This right here is the CCI set at a period of 20 with a reading of 202.71. Wow. Nice breakout on volume on Yahoo, my favorite stock. I'll explain why here in a minute, but let's talk about the CCI first. Okay. First of all, there's the line. Okay. This is the signal line. It ranges. First of all, it's unbounded, which means what you see here is minus 200 plus 200. Under really extreme conditions like a huge gap or a super long rally or a super long fall, I've seen readings as high as minus 500 or plus 500. So there's no real telling how high or low it can go. But what is important is there's always three horizontal lines. You have the minus 100, the 0, and the plus 100 line. And let me just say right here, the CCI is one of the very last indicators I found, and it turned out to be the best one of them all. It is my primary buy and sell signal giver. It is an amazing indicator when combined with a couple of others, but it is more accurate and more reliable than any other indicator I've come across, if you know how to read it right. Okay, so basically it's oversold when it's, below minus 100, whatever the range is. Whenever you see it down here in the brown or red or whatever color that is, that means it's really oversold. Okay, and when it starts to peak and turn back down, that means it's pretty overbought, but you have to confirm with RSI or stochastics or a couple of others. Okay, so basically it moves the way the stock does. Okay, and the 0 line is very important, which I'll show you how support, when it comes down and bounces up off the 0 line, you're going to see another rally. That happened there, it happened there, but let me get into the annotate chart section now, and I'll show you 2 or 3 examples of how this indicator actually works. Now let me explain what the book says, what Mr. Lambert said about a buy signal. It's when the CCI crosses up through the plus 100 line. But when you look at stochastics and other indicators that indicate overbought and oversold conditions, that's pretty dangerous. Okay, I always buy right here when it starts up from a very sharp and a very pointed drop at minus 200. Sometimes it just dips below the minus 100 line, like right here. This was also a buy signal for me. Okay, and I don't really see any others. Okay, the other really important thing is the 0 line. Every time it comes down and bounces off of the 0 line, like right there and right here and right here, that also means the stock is going to go up. It goes up here, it goes up there, it goes up on the on my buy signal crossing up through the minus 100 line. Now, I either buy, if it's a really sharp pointy that is just way far below, I take my first position as soon as it starts turning up. Okay, because at that point, stochastics is under 20 turning back up. The RSI is probably at 30 and starting to turn up. Okay, but a real good place to buy is when it crosses up through the minus 100 line after dropping below it. Now let's take a look at my sell signals. Okay, it's when the CCI crosses up through the plus 100 line and then forms a very sharp point and starts turning down, like right here. Okay, the stock does go down. Here's another one. Okay, that one worked even better. Okay, and there's a little one here, but I like it when they're real pointy. This one worked also. Both of these worked. Okay, I guess I might as well draw a line here and move that one over just a little bit. Okay, and another one there. As you can see, at the top of the red line here, it goes down. Same thing here. Now you are talking about 50 cents to $1. Okay. Now, in this case here, where it goes up above the plus 100 and then does not come straight down but goes sideways, the sell signal comes right here when it crosses down through the plus 100 line. And that was the beginning of a pretty serious downtrend here. Okay? And the next buy came right here. Now remember, according to the book, when you do a scan at stockcharts.com, they say a CCI buy signal or a new CCI stock in an uptrend is when it crosses up through the plus 100 line. But that rarely works. I'll show you an example, one that does. But, you know, and in this case it did work. But I like buying down here first. See, you would, according to my signal, you would have been buying at 24. According to their signal, you would have been buying at $27 and missed out on a $3 run. Okay, there's a nice little double bottom chart pattern here that broke out, increasing volume, and then boom, look at this volume as it breaks out into blue sky territory above this level of resistance. Now let's take a look at a buy the book, according to Mr. Lambert, buy signal, which happened right here when the CCI crossed up through the plus 100 line. Okay, that happened at about, $6.75, let's say $7, and it ran all the way to about $8.50. Now, according to the book, this was a good buy signal, according to Mr. Lambert, because the CCI crossed up through the plus 100 line and the stock took off from about 325 to about 525. Nice reversal candle right there, and it pulled back probably to the 38% fib line. Okay, but right before it had 1, 2, 3, 4 instances of crossing up through the plus 100 line that actually did work a little, but you have these tall wicks on these candles, so it pulled back. Okay, so this is a good example of a stock that runs, and there wasn't really a whole lot of volume until it really started to take off and get vertical, and then the reversal happened and the pullback. Here's another example of a good one right here. CCI crosses up through the plus 100 line and volume. It breaks above all this resistance. Volume grows and grows. It ran from about $4.50 to over $8 on that run. And there was another one right here too. CCI crosses up through the plus 100 line with volume, increasing volume. And it runs from about $7 up to $8. And again, we have a beautiful looking double bottom, a W-shaped chart pattern, and when it breaks above this area of resistance, it takes off. And here's another great example, multiple times. CCI goes down, bounces off the zero line, crosses up through plus 100, right there, the stock takes off. Bounces off the zero line again, crosses up through the plus 100 line, the stock takes off. Same thing here. Bounces up off a zero, crosses up through plus 100, the stock goes up. One more time. This time it went below 0, but when it did finally cross back up through the plus 100, the stock took off. And just like support at the 0 line and bouncing up off of it, resistance at the 0 line is bearish. Right here, it crossed up through the minus 100 line, got rejected at the 0 line, and the stock went down.